Hey, welcome to the next panel we have here. It's got a bit of a complicated name. The growing market for non-USD stablecoin transactions. We'll break that down. I mean, it's pretty simple. It's basically this whole idea of 99% of the market is USD denominated, but should that be? We believe not, and we're going to chat about it. Yeah, my name is Johannes. I am the managing director of the Frankencoin Association, and I'm Swiss. What we are doing is we're building, or we've built, a Swiss franc stablecoin. Rather simple belief that the Swiss franc is a better store of value than the dollar. I think there might be very, very differing opinions on that. But today I'm moderating this amazing panel, and I'm joined by a bunch of extraordinary gentlemen. And before we get started, because it's pretty diverse, right, what we do, I would like to do a very, very brief intro round with you guys. So maybe we just start on that side, actually. So please, Matt, very briefly, who are you? What brings you here today?
Yeah, so nice to meet you all. Matt Stafford. I lead the global ecosystem team at Circle. So basically cover all of our blockchain partnerships, all of DeFi, and all of our essentially on-chain activities that drive USDC and USD circulation. It's great to be here.
Marlison.
Okay, Marlison from Transfero. We are issuer of certain stablecoins in Latin America as Brazilian, BRZ, Argentinian, ARZ, and Chilean, CHZ.
I'm actually always, when I see you, I'm very, very jealous, because if you look at all the lists of, we love the dollars and the euros because that doesn't count. Yeah. But it always bothers me with the Frankencoin to be number 2 behind you guys.
Mm-hmm. Frankly speaking, yes.
Yeah, please, Deji.
Okay, nice to meet you. Okay, my name is Deji, and I work with a company called CNG and Stablecoin. So it's a Naira-backed stablecoin out of Nigeria, and I'm glad to be here.
Yeah, myself. Yeah, hi guys. My name is Nail, and I'm building Indonesian rupiah-backed stablecoin, and our vision is actually bring the on-chain banking for all Indonesians to make it happen. Yeah.
Hello, everybody. My name is Maluku. I'm the CEO and the co-founder of Mansa. At Mansa, essentially what we do is we provide the necessary infrastructure that enables global payments to be settled instantly 24/7 globally in emerging markets. We've done over $160 million worth of transactions in the past 7 months, and we are backed by Tether. And first of all, and last but not least, thank you so much for Dennis over there for having me on this panel and for organizing such a wonderful day. Really appreciate it, my man.
Amazing. Thank you so much, guys. I mean, this is actually quite impressive. We have every single continent, apart from Oceania, but the Australians, and I think they can do their own thing, represented here. So it's a really diverse thing, and I'm really happy that stablecoins are going global. Let's start with the obvious one. I mean, as I said before, 99.8% of the global market is USD denominated. Mm-hmm. Do we have to change that, and why? Maybe you want to start, Marlison.
I think that our conversation needs to be about the use case, and most of new companies or projects that are trying to create something, they are not focusing on the real use case, that is how to solve problems that we have from the last 2 or 3 decades in our countries, and how could we leverage this in a compliance and regulated way, but not stopping the innovation and usage of Web3 or DeFi. So how could we join forces and make this global infrastructure connecting EuroC, BRZ, Nigeria, Indonesia, and having these continents transacting between each other? This is, for me, the huge use case for everyone.
So I'm now playing a bit devil's advocate here. Why do you want to have, isn't it a lot easier to think in just one currency? Why do you need to have local currencies?
We need it.
Why?
Because technically, 99.9%
yes,
currently is dominated by USD-backed stablecoin. And most of people that would like to contribute or having or even participating in on-chain economy, they must have USD-backed stablecoin. By that said, our money in our central bank would go away to US-backed stablecoin. So I don't think we don't need to 100% do like that. Then we could have our own local stablecoin that could be participating as well in on-chain economy, right?
And if I just have to add, right, I think one very important thing to mention and that a lot of people forget when speaking about local stablecoins is the biggest local stablecoins are in the markets that have the largest dollar shortages, right? For example, in Nigeria, for example, it's almost impossible if I'm a big oil producer and I have to pay millions of dollars for my oil imports, most banks can't give it to me. Right? But then what Deji here created together with Convexity, at least if I have a Naira-backed stablecoin, I can go on chain and I'm limited by the infinite number of USDT or like USDC, which is what, like $300 billion of like USDT, right? So it just makes transacting with economies that have previously been excluded from the global financial ecosystem, which is Nigeria, which is Indonesia, which is a Turkish lira, right? It makes switching between these currencies so much more seamless, so much more better, and so much easier as well. Because if, for example, Nathaniel here has all these API connections. So if I go from USDT to IDRX, I can now off-ramp it into my Grab account super quickly.
Yeah.
And that makes things just so much easier. And these are the real use cases that we actually need, because there's no way that we can onboard all these like economies if we do not have a simple means for them to get onboarded on chain. And I think this is what these guys are doing an excellent job in.
Mm-hmm. Yeah, I would agree as well. I mean, obviously we care a lot about distribution and circulation of USDC, but we also want to be the best kind of like global stablecoin network and connect all these local currencies with USDC, because that just creates deeper network effects. And if you think about markets like the off-chain FX market today, which is kind of $8 trillion addressable market, and we're already seeing a lot of innovation where currencies are coming on chain and venues are standing at pairs with USDC and EURC and many other stablecoins. And we're starting to figure out the building blocks and ingredients to actually make this faster, more secure, more cost efficient, and just creating a lot of value. So I think that's just one real addressable market that we're only at the very kind of like starting line of solving for. And that's what excites us. This is not kind of a winner takes all. This is very much kind of a we all participate, we all can create value, and we can all share in that value creation across the globe.
I mean, like, I wanted to talk a bit about CBDCs, but I'm going to push that back because I personally think this is a topic which gets boring very quickly. But you're all operating in vastly different regulatory environments. I mean, in MiCA in Europe, you have a very clear framework right now, where you're in a sense sanctioned, and that gives you access to the whole banking infrastructure. In Switzerland, we don't have that. That's why, that's why we are successful as Francocoin with a completely decentralized model, which I think would be a lot harder in the Euro market. I mean, there's other reasons, but we don't have that regulation, and the FINMA, or the regulator, is still kind of on a pushback while the EU says, hey, look, let's do it, and let's, create a level playing field. What is, vastly different backgrounds, as I said. Where would you say, what is the biggest challenges you have, and also, where you're surprised how easy it is to work with the local regulator? Maybe, Digi, if you want to chime in on that.
The challenges in working with regulations?
Yeah, like working with the local Nigerian regulator.
Please give us the secret of working. Please, brother, please.
So for me, that is a terrain I feel is very tortuous to actually do that. We started our journey with the regulators in Nigeria since 2021.
Yeah.
And I don't think we're out of water at this point. So you can imagine a startup that's trying to just go quickly as things are moving, but you're not able to move that fast. Mm-hmm. So for us, I think it's an ecosystem, and you can't build outside the regulators. They are part of the stakeholders. Yeah. And based on that, we have to do all we could to educate them about what we see as the future of money. And again, we hit a roadblock where the central bank on their own decided to issue CBDC, if you're following Nigeria.
That was actually my follow-up question for both of you guys.
Yeah, so there's why do we need you since we have our CBDC? And so I made a very simple analogy to the central bank, and I told them, it's good you have your CBDC, But your CBDC is an intranet. And I remember where we're coming from, where when you walk in, your office is going to be something for punishment if you connect to the internet those days.
Yeah.
And so everyone has to work within the intranet of that office. But today, fast forward, everyone connects to the internet. So I said, your CBDC is still intranet, if you may. And so what I'm building is the internet version. And so somehow we still have to do some handshake because the young population in Nigeria are interacting with the different blockchains, Ethereum, Polygon, mention them. Yours is not there. It's caged in a small, fragment. So we can have an handshake where eventually if you have to issue it and it's adopted, I can make your CBDC my backing asset and I give those guys some leeway to go into the public blockchain. But of course we know the story, it never scaled. And so we went back to our vanilla stablecoin and we recently just launched like 2 months ago. Yeah.
Interesting. I mean, you're in a super similar situation, Marlison, right, in Brazil, where you also now are kind of having a CBDC. You mentioned that in our bilateral conversation before, but what's your experience? How do you...
Yeah, in Brazil, every challenge or every problem that we face become a new goal for the transfer team, right? So, short story here. 2019, I resolved to enter in the investment side, and I create a fund, a crypto fund in Bahamas. So I fly to there, open the companies, and I had to send money to incorporate the company, establish the capital. And no banks in Brazil were able to send money to Bahamas. I was a businessman, I had a lot of money in my bank account, and I were not able to send money. And this started to, why not? And we met a startup. I fulfill a form in Google Forms, and 48 hours later, my money was in Bahamas. And I was, what the hell? How did you do that? And the company said, I used this infrastructure, my first bank. I tried 4 banks in Brazil to send money to Bahamas, and I was unable to send. In 2019, we created the BRZ, inspired in Tether. So how could we make Brazilian reais accessible by the global market? So in 2021, we reached the mark of 1 billion Brazilian reais used in a daily basis in the global in blockchain. And what we discovered, every emerging country has the same problem. Capital control, the regulator does not understand the blockchain, the technology, and etc. And the challenge that we are facing right now is how to teach the central banks to enter in the blockchain ecosystem. So because this, we need to join forces and start to work together.
That's why we're sitting here together on stage, right? To make this happen, not just in the US,
agree.
everywhere. And actually, I think, Nathaniel, you're facing a bit of a different struggle where you don't have a CBDC, but you have very, very strict capital controls in Indonesia. How do you work with that?
Yeah, even though of the CBDC itself, so actually we are not going to compete with CBDC in Indonesia technically. Yeah. If they would like to make it happen, then our position wouldn't be the same, because CBDC, the thing will be the M0. Then if they would like to using the CBDC as the main liability for us, let us use the CBDC as our back on the bank, central bank, right?
Yeah.
And we just make it stablecoin from the CBDC. So our position will be the M1 instead of M0. So I do not see that there is any conflict of CBDC itself.
It's a very, very good point you just made there with the M1 versus M0, because as you said, right, M0 is not per se a problem. The issue which we see in Switzerland is that the central bank is somewhat worried that if they would allow kind of a, it's called M1, like a publicly accessible stablecoin, that this would undermine the business model of banks. And that is kind of their challenge to have. That's why we're saying, hey, we're actually not going to do it. So, if we ever do a CBDC in Switzerland, and I think it's different in Brazil and in Nigeria, right? Or China, for that matter, with the E1. If we were going to do a CBDC in Switzerland, it's going to be basically between banks. Now, there's already digital central bank money. It's not physical. So it would purely be a a change of infrastructure, but it would have zero impact.
Yep.
At least, in Switzerland that is. And I think the Eurozone is a bit different once again because they're playing around with
Yeah, and I think to be honest, our view is there's so much room for private sector innovation because there's real problems to be solved, there's real demand. And if you have a strong set of assets and capabilities and people, why not create something that's like super valuable whilst the CBDCs kind of develop their own national infrastructure? And it's not that we don't want to collaborate with them, and we do in certain cases, but we also think there's so much value creation to be had by just focusing on real world problems and trying to figure out that in both the US and Europe, I would say, right now.
Just adding here, I don't see problem in every central bank start their own CDBC project. It's okay. They still need to have the capital control. They need to manage their collateral. It's okay. Our job is how can we connect the local financial system to the globe. Because I don't see Brazilian central bank trading directly with the Indonesian one.
That's very true.
I don't see this.
it all goes to the dollar at the moment, right?
You know what this reminds me of? This model actually reminds me on the onshore yuan and the offshore yuan.
Yeah.
So the onshore yuan and the offshore yuan have completely different capital controls, right? The onshore yuan is purely just used for trading into China. The government watches that closely, and then there's the offshore yuan. So if you send money to China or you hold RMB in your bank account, that's actually the offshore yuan, right? So I think a similar model could be used with all these different stablecoins. You have one offshore yuan that's essentially kept in Hong Kong that trades with the whole world, right? Which can be like your stablecoin, and then you have the onshore version, which is essentially used by your financial institutions, and which is mainly just like a back-end tool to essentially move money much more seamlessly.
So, and that's what you do, guys, with Mansa, right? Yeah. You're basically building those corridors. Everyone here is aware of this correspondent bank system, which you have in a traditional world, where if you want to, trade in the dollar, you have to go through an American bank. So I can't send, two Swiss banks. They cannot trade dollar with each other. They have to go through the US, and they don't like that very much. Crypto changes that, but where do you guys come in with Mansa there? And what's your biggest corridors actually?
Yeah, so we have really large corridors. It's mainly Ghana, Nigeria, rest of the world, Europe, Africa, US, Southeast Asia. So we're starting to move into Latin as well.
If you say Europe, what is the, is that...
mostly remittance, B2B transactions. It's all, so for us, right, the sending currency doesn't really matter. What we at Mansa really focus on is enabling the seamless flow and enabling payment companies to be able to do larger transactions. Because the way that international payments currently works right now is everything relies on pre-funding. If I'm a payment company in Europe and I want to do a transaction to Brazil, I must keep money with a banking partner in Brazil. So correspondent bank, right? So we essentially eliminate correspondent banking, and we say whenever you have a transaction anywhere across the world, we will pre-fund the transaction for you. And we would do it on a revolving basis for 24 to 48 hours, right? This enables payment companies to do transactions much quicker, much faster. Most payment companies we work with have increased their transaction volume by 30% and their revenue by over 10%, right? But this is just honestly the beginning. We're building the infrastructure that bypasses corresponding banking and that can truly make money move 24/7 globally.
Interesting. I have a theory. My theory is a bit that there's two use cases for stablecoins. One is what you just said, right? Payments, transfers. The other one is, store of value. And I think that is very much depending, and I'm saying that from a Swiss perspective, obviously, because we are, from a transactional perspective, quite irrelevant because, why would you trade in Swiss francs? However, from a store of value perspective, the Swiss franc is super, super valuable. Now, I believe that is a bit different to you guys. Maybe Matt, with exception to you, where do you see the ERC? Is that more transactional? Do you want to position yourself as transactional or more store of value for people to be able to hold euros? Yeah,
I think we see it as kind of a continuum. And I think where we've seen a lot of growth in kind of usage and use cases is in DeFi actually. So think about top borrow loan protocols like Camino on Solana and Aave on Base. They've actually had quite a lot of utilization and borrow demand for ERC, which
actually with roughly 200 million in circulation, it's actually decent liquidity. So people are actually using it to diversify their currency assets and hedge their positions overall.
Hedge the dollar in the end.
Yeah, hedge the dollar. And also the centralized exchanges like Coinbase and OKX, Bitstamp, even this morning, I think Bybit basically got a MiCA license. I think they're going to be doing a lot now to lean into USD. So crypto trading is obviously a massive near-term circulation driver. It's all still obviously quite dollar-based right now, and it's hard to see it moving away from the dollar in the really near term. But
we should join forces in that. I mean, all of us.
Yes.
we should have changed the name of this panel to "How can we get rid of the dollar?" Maybe not.
Already.
Maybe not harsh, but
exactly. Brother, in this climate, you should be careful what you say.
yeah, cut that out from the.
Yeah.
No, I mean, I personally, just to put it in relation, I believe that the dollar is a really, really good currency as trading because you can think in one kind of currency. You don't have to switch. However, as a store of value, and I've said that publicly before. I've said it when I was in Denver. I think like variety is good. You want to, I was in a fund for a longer time building that crypto fund in Switzerland, and my boss always said. Diversification is the only free lunch you can get. And I think this applies here as well, right? It's having a 100% dollar basket is not optimal from a risk perspective.
Yeah, I think the other big thing is as well that there's a lot of businesses and consumers in different countries around the world that don't really want to change. It's a much bigger behavior change to go from local fiat currency to a US dollar stablecoin, and it's much easier to go from local fiat to a local stablecoin. And then get an action, get those companies and entities to take actions, whether it's like payments or trades or swaps or whatever it is, on the local currency first. And that's almost like a step that we're seeing a lot with big fintechs and e-commerce companies and TradFi companies in Europe, who are more actually interested in kind of like doubling down on figuring out how to get EuroC to work than actually USDC today.
Do you see? Sorry. Follow-up question to you, Matt. Euro basically being the second largest currency in the world after the dollar. Do you see people in emerging markets especially adopt EuroC as a store of value? Or is that not really a thing?
It's still largely, it depends on the market. I think again, Africa is, we've seen some good traction there with EuroC. Latin America is obviously still very dollar based. So it's a bit of a mix, but it's still largely dollar store value that we're seeing overall. But EuroC is interesting again for the cross-border money movement use cases and people who actually feel more comfortable holding euro on the other side of a transaction in African countries for sure.
Just adding a point here, emerging countries needs to create some kind of protection for themselves. After Bitcoin, the people started to study a little bit more and having access in a global financial service. They can choose if they want to invest in their own country or another one. Mm-hmm. And these stablecoins can be the bridge between the local investment and another one. For example, in Brazil, you have between 12 and 15% of your tax interest rates annually. In Argentina, you have a little bit more, 100%, I don't know.
Well,
but
this actually is a, once again, talking as a Swiss person here. For the ones who don't know, on Swiss government bonds, you have negative interest rates.
Really? Yeah.
Yes.
Oh, wow. Yeah.
So for me, this is something, and what you talk about here is like the interest rate theorem, where you say you should not be able to make any gains by just trading interest rate. And that is very funny in crypto, where everyone is running after the highest yield without asking themselves, hey, what is actually the underlying risk? What is the forward rate of that same thing? Which makes my life harder, because obviously I think the dollar Swiss franc forward rate is like 5% or something, like for 1 year. So the market expects the dollar and it actually went down 15% since the beginning of the year. So having like a 3% yield on that is substantially better than having like a 5% yield on an asset which devaluates. But we're not there with crypto. Are you believe that's going to change? Or do you see that? Maybe let's rephrase that. Are your stablecoins yield bearing at the moment, or is there like? And I know with the EuroC there is, right, with Aave. But
Yes, we are.
you are as well.
Yes, we are.
All of you. Cool.
Yes, we are.
And we actually have, so we acquired a company called Hashnote, which has USYC, and that's basically a TMMF, which is has treasury yields attached to it. And that is because like it's a very different proposition to money at rest versus money in motion. It's very different. And we feel the combination of those two things for use cases from crypto trading to treasury management to a lot of other things is actually quite powerful, having those two different dimensions of use cases.
Yeah.
I think that, so from my point of view, there are two different types. So for those who would like to saving money on other local currency, for example, maybe there is Indonesian that would love to have EURC as well, right? As they believe that EURC may be stronger compared to USDC, for example. But there are several people that would love to using their local fiat currency for their on-chain activities, for example. It's hard for them from the fiat to the USD. There will be several conversion. So if they would like to, if they could come from the local currency, from the local stablecoin, even though it will be ended on USDC, or even it will be ended on Euro, for example, but technically it will be much more easier for all local people. Right? So there are two types of people. So there's would love to saving on USDC or saving on EURC, and there are other people that would love just using local currency for much easier.
Yeah.
But do we actually need yield-bearing stablecoins?
Sorry?
Do we actually need yield-bearing stablecoins? It's because I feel like it's a different market, right? Because if you look at the people that actually really need stablecoins, what they want to do is they want to protect themselves from local currency devaluation, or they want to be able to transact with the outside world, right?
Now this is a super interesting question, because that brings me actually to the next one, and this is, I think, probably the difference between, we're now sitting here at the edges, between what Matt and I are doing versus what you guys are doing, where, both the euro and the Swiss franc are used as a store of value, and that it becomes relevant, whereas, with, the Argentinian peso as the interesting example with the couple of 1,000% inflation in the last couple of years, and as well as most African currencies, and Southeast Asian is the same, right? That is where you want to have a high volumes, because you don't want to actually stay in that thing, and then the yield becomes irrelevant in a sense, because you want to get rid of it anyways.
Like the yield doesn't make up for it, right?
Exactly.
Like even if you give me 10%, but I'm losing 50% or 25%, it just doesn't make up for it.
Exactly.
I think that's why it was, I agree, and I think that's why it's important to not just have a yield-bearing stablecoin. So in the trading use case, where people are putting down huge amounts of margin on Binance, for example, if you couldn't get out of that position quickly, it's not great, because you kind of locked in. But if you're able to redeem 24/7 for a liquid asset like USDC, it changes the dynamic. So I agree. It has to be a combined proposition between yield and then the ability to get into something that can be used for payments and fast transactions.
But I think these are two completely different customer personas, right?
Not necessarily.
I think it's two.
Not necessarily.
It's more like obviously like you have some that overlap, right? But I think it's like, if for the market for stablecoins, I think 90% just want to get out of the local currencies. Right, and then you have that 10%, who are in Europe and in America. They're like, oh, I'm holding my dollars. Why can I get access to like treasuries? Or I'm holding my euros.
I'm actually looking at it completely the other way around, because if you're in the US or in Europe, you don't need it. In Switzerland, I can very easily, and not a bad example once again actually, but in Europe, or I can get treasury shares very easily if I'm based in the US. I open like
Not as easily
swap.
as you think. I don't think it's as easy as you think opening like a brokerage
I
account
open up
for the majority of people. I mean, like people that aren't financially savvy, right? Like let's look at, so there's a huge part of the population that never has opened Robinhood or never has, you know what I mean?
Okay,
so because they're not financially
fair
savvy,
enough.
right?
Fair enough. But to be very honest, right now, someone who is using stablecoins,
Let me put one thing here.
yes.
Our markets still are growing, and we are still learning financial education inside our countries. As soon as our major economies, if you talk about the global majority,
Yeah.
if we reach the limit that everyone is financial educated, everyone understand how to use money properly, our stablecoins will keep a lot of volume on that.
Yeah.
And nowadays, who are using our stablecoins? Companies, trading,
The financial
and
savvy people,
investor,
right?
market makers, and crypto exchange.
Yeah.
As soon as the population understand how they can use money in a daily basis, using stablecoins, using crypto properly, you will see the increase of volume started in those stablecoins.
And that is actually where I believe that we should work together. And once again, Matt and me were sitting like on the edges, but one of the big, and disagree with me if you want, but one of the big things I see is this ability to switch. Where you say, yes, I want to transact in, IDRX, right? I want to transact in Naira. I want to transact in BRC. However, once I've transacted, I made money. I can immediately, at very, very low cost, switch into something like the EURC, like the CHF, get a yield on that, and as soon as I want to trade again, I just switch. So you really have, or you don't even have to switch because you can just use that as a collateral, take out the loan in your local currency, trade with that. Because you want that, because if you take out that loan and you expect that to fall, well, that's good business for you.
Yeah.
So and this is something that, and I said before, it's very easy to access, at least if you're in Europe or if you're in the US. It's very easy to accept treasury shares. You download an app like Robinhood and you just get it, right? But this setup, taking out loans, having extremely low fees, because that is, we're talking about basis points here. Today, that is not accessible. That is not even accessible in Europe or the US. And by having this decentralized, now suddenly the whole world can access it. So now the only part which is missing, as you very, very rightly said, Marlison, you need to educate people about it as well.
Yeah. Imagine we are in wartime. We have Russian fighting with Ukraine. From my perspective, this war will finish soon. But how could we help BRICS countries to trade between each other? If the banks cannot send money directly to Russia because of the sanctions, we have in Latin America Cuba as well. The banks in Latin America cannot send money directly to Cuba, but in Web3, using stablecoins, we can do that. Yeah. But how could we manage this platform trading between each other without passing through dollars, for example? This is the major question. How could we, a Nigerian one, send money to Brazil without pass through dollar, even pricing through dollars? This is the problem that we need to solve.
Yeah. But I think, if we want to do that, right, and then you're basically talking about like effects, then it's all a question of liquidity, right? So how easy it is for me to go from BRLA to IDRX, right? Yeah. So in order to do that, right, the easiest, there's only two ways. Either you match it with existing cross-border payment flows, or you pre-fund it yourself. So, and that's the only way where we can have the tighter spreads, because otherwise it becomes way too expensive.
Yeah, so we've recently kind of announced and are investing in Circle Payments Network, and a big part of that is trying to help businesses figure out how to solve this kind of cross-border remittances problem. And it's a really difficult problem for exactly that reason, is liquidity challenges and all sorts of other sanction screening and things that we need to do. And I think it's going to take time to figure that out. And the reality is the biggest corridors are actually the hardest ones to solve for because of these exact kind of liquidity issues. But it's a problem worth trying to solve collectively because it's such a big challenge that so many folks face and so much kind of value creation to be had overall.
Amazing. We have 10 minutes left. I know we have a bunch of people here. I actually want to start, maybe have some questions, and if you have questions, please raise your hands. I want to do a very, very quick kind of idea collection. And for each of you, what's your killer app? So what is right now, not what could be, what is right now the #1 use case of each of your product/stablecoin you have? Let's start with Matt again.
Yeah, I'm going to slightly cheat because the thing that Circle's built, which is I think the most powerful thing, is actually the connectivity between all these 20 blockchains and the way to securely move USDC between that, which we want to do for
Not USDC, USDC.
So USDC and also other currencies as well that we want to work with. But I guess like that foundation has enabled the 20 trillion of transactions which have happened on chain, and it's actually the really hard work to build up the foundational layer that then apps like, I mean, just for example, kind of like Polymarket, not just an app that's managed to kind of successfully abstract crypto from its use case. It's all built on the foundation of the connectivity and an interoperability between it. So bit of a cheating answer, but it's almost like an essential ingredient to enable these powerful apps. Hopefully there's better answers.
Yeah. It's not an ideal. I don't have an ideal, but if you see the wallets, the crypto wallets, they can achieve the top one of the major use case. Because if you put in MetaMask, for example, fiat on-off ramps between each other. MetaMask can accept a lot of blockchains, a lot of stablecoins. If they have on their portfolio management investment options from those countries, and they can suggest, okay guys, this month it's better to invest in Nigeria because something happened there, and instead 1%, you can have 20%. You click in a button, the stablecoins just change it, and you have a staking option inside their own portfolio. This can kill every bank in the world. But
No, now, today.
Now,
What is now?
today,
What is now?
today.
What are you doing now?
talking about our industry, I think...
Talking about Transfero, talking about the BRC.
Transfer.
No, I cannot say Transfero. Coinbase is the best, I think that is very well positioned to gain more space, Coinbase. But I don't know if they can do that.
But, if you would have to want just one thing, the BRC, what is it most used for today?
Use
Use case.
importation.
Importation.
Yeah.
Go, sir.
Yeah, so for us, I think we saw a spike 2 weeks ago, and I think those use cases are clearly people able to move from CNGN, which is the local stablecoin,
Yeah.
directly to the tokenized money market fund and created by an asset manager.
Interesting, because that is what we just...
Last week we saw that, and you could move into those tokenized money market funds coming from maybe Euro stablecoin,
Yeah.
USD stablecoin, USDC, USDT, and you just move
Frank
to
coin.
local stablecoin,
Yeah.
and then you go to the market. And what we saw is that most of the guys taking advantage, because again, the interest rate is very high, so that app gives about 20.24%.
Yeah.
So we see people with dollars changing that and mapping it on the Eurodrum and picking CNGN into that app. And for us, that is fantastic. And I think we see a lot of that traffic just 2 weeks ago. So like you said, we just launched and we're learning.
Wait. Do I understand that correctly now? So I was making that case that, people from emerging markets would go out.
No, these people are coming. That's what we saw.
Is this now,
big are the
from an
yields?
economic perspective?
Say again?
What's the yield on the money market fund?
20.4.
So it's 20%, but at the same time, what is your forward rate?
Say again?
What is your forward rate you have? Because that's this
Yeah,
point I just
so-
made before, where you have, if you have a currency that yields 20%, but it devalues by 30% in a year, you don't make money on that.
Yeah, so for now, I think, and that is not the only one, like you asked for a killer app.
Yeah.
We also saw a quick switch between Naira to Kenyan shilling, for example. So I was in Kenya about 2-3 weeks ago. I never use any money. I just have my stablecoin. And in Kenya, I just swap to M-Pesa on that same app. So I think a lot of use cases will come up. People are building different rails today, and we're encouraging them from behind because we are issuers. So people are building wallet systems, people are building on and off ramping tokenized money market funds. So we're seeing a lot of these granular use cases locally, and that's what we want to see. So the next stage will be for us to be able to singly just handshake Brazil, handshake some other stable coins, And I think it's going to be a very fantastic chance to look forward to.
Interesting. Nathaniel, what's your number one use case right now?
For me, IDRX nowadays is now aiming for the on-chain banking app. Because we do think by having all those products, like a bank, like you could save, you could spend, you could send,
Well,
you could lend, you could
but
borrow.
what are you doing? Like if you look at the
We
numbers,
do have all of that one.
but no, what are the numbers? If you look at the numbers, what is most used?
Yeah, I mean by have all that one.
Yeah.
By have save, by have send, by have spending, by have lending and also borrowing. All this make IDRX keep transacted every single day. People keep sending money through our stablecoin.
Yeah.
People keep saving the IDR comparing to the local bank, traditional finance, because we do give a better yield as well. And people are using our stablecoin for lending and borrowing.
Yeah.
Because in Indonesia, if you would like to borrow something, now they borrow in USDT or USDC, for example. For example, if they do borrow right now with the currency exchange today, probably if they would like to pay the borrow in the 3 months later, for example, the foreign exchange is already changed. So it's more makes sense for Indonesian to be able to lend and borrow using our local stablecoin. So it's already happened, Jonathan. It's not in the future, but it's already happened, and it helps us a lot to hit our first 50 million on-chain transaction.
There you go.
Yeah.
Congrats, buddy.
Congrats. Thank you.
Yeah. So for us, right, like what we have been seeing, two main use cases is on and off ramp.
Yeah.
Because if you hold the thesis that yes, payments are going on chain, and if you have corporates that are using stablecoins, these corporates transact in the tens of millions of dollars, right? And a lot of these payment companies just don't casually have tens of millions of stablecoins lying around, right? So we've been, providing liquidity for that, and most of it is B2B payments as well, right? So it's been made mostly on and off ramp B2B payment. I think from our $160 million in volume, I believe that probably like 150. No, I think probably 100 is on and off ramp, and 60 is just B2B payments.
Into which
corridors? Everywhere.
Everywhere. Yeah.
Everywhere. That's global west to
Is there a
global
difference?
south.
Is there a difference from on ramps to off ramps? So basically, you see people on ramping in emerging markets and off ramping into
Correct. But it's also quite opposite. You have people on ramping in Europe, America, and then off ramping into the emerging market currencies.
Interesting. Cool. Yeah, I mean, we're a bit different, I guess, in that sense, in Swiss franc or the franc because we're decentralized. So, funny enough, one of the use cases we see is access to liquidity because you can use the Franken coin to use Swiss, like legally Swiss collateralized or on-chain issued equity as a collateral. So we see larger SMEs actually to do that, and we also see people parking capital because you get a better yield on chain with the Swiss franc than you get off chain. That is because of the kind of the structure of the Swiss market. We're just internationally we're just really getting started. It's funny that you can at the moment there's this. I don't know why. Maybe you have an idea on that. There's very weird yield structures going on-chain lending markets, Aave and especially Morpho, where you can, get like loans for a fraction of a percent, and then the same thing turn into another dollar and get 10-15% of yield on top. I economically speaking makes no sense. Why this is the case, I was just observing it, and there's I know people are really extracting value because it's free money, which is on the table. Maybe it's VC funds who are subsidizing too much, but that's what we're saying. And probably we're a bit different here because we're more on the really decentralized, DeFi world.
Yeah, I think a lot of that is we're seeing a lot of that as well, working closely with the Borrow Lens, and it's restaking is a big use case, which is essentially just doubling the yields from what some of these folks are making just through DeFi investments, but then also restaking on some of the emerging kind of restaking protocols. But yeah, there's a lot happening now, which is hard to kind of follow every step in a journey. And everyone's left guessing, like how are they actually generating the yields? Which
I actually have one question before panel
Yeah, 8 seconds.
What is Circle's view towards these non-USD stablecoins, and how are you integrating them into the Circle payments network, if at all?
Yeah, so
And will you be integrating other
Yes.
coins like USDT by any chance, or are you only keeping it USDC affiliated?
our vision is to be an open network and to definitely integrate local stablecoins from any country that is interested in kind of like building and connecting to USDC. I think we'll proactively work with bigger projects that have real use cases and real demand, and we have a set of tools and technology that can help actually build local stablecoins. Even USDT, we don't want to be exclusive to USDC longer term. We see a world where kind of USDT can come into the network. We'll build around USDC and Circle products, and we think we can create a really best-in-class experience with that. But if folks want to come with USDT or other USD stablecoins, we see that as valuable as well from a network activity and transactional standpoint. But local stables are a massive part of our vision, and we're going to be working hard to figure out how to integrate them in all the major countries.
Are you going to try and create them yourselves, or are you going to work with issuers here?
Yeah, we definitely don't want to create them ourselves. We've proven through our experience so far that's very difficult. So we want to work with the ecosystem to help create stablecoins with our tools and technology, and also connect them to our distribution and our ecosystem networks that we built. So it's a partnership model. It's definitely a partnership model.
Yeah.
Amazing. Hey, we're at the end of our conversation. Gentlemen, thank you very, very much. And maybe to sum it up, let's bring diversity to stablecoins. Let's make this a global phenomenon. Thank you so much.
Appreciate it. Thank you so much.
Hey.